India has unveiled its budget for the financial year 2024-25. Finance Minister Nirmala Sitharaman made several big announcements. However, like every year, it was income tax that kept people glued to the live proceedings from Parliament. Indian taxpayers were eagerly waiting for some relief. They have been urging Prime Minister Narendra Modi's government to lower their tax burden. The budget did provide some relief, but only for those using the new tax regime. India uses two income tax systems: the old tax regime that offers several deductions for taxpayers and the new tax regime that offers a slightly lower taxation rate for some tax slabs. However, it does not provide any deductions on taxable income. In the 2024 budget, the government left the old tax regime unchanged. For the new tax regime, the government has raised the standard deduction from 50,000 rupees to 75,000 rupees.
Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners.
The Finance Minister also revised the tax slabs under the new tax regime. She said that these changes will help taxpayers save up to 17,500 rupees per year.
Second, in the new tax regime, the tax rate structure is proposed to be revised as follows: 0 to 3 lakh rupees, nil; 3 to 7 lakh rupees, 5%; 7 to 10 lakh rupees, 10%; 10 to 12 lakh rupees, 15%; 12 to 15 lakh rupees, 20%; and above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax.
If you're an Indian taxpayer and unsure which regime suits you best after 2024, here's how you could decide. We begin with the new tax regime. Since its introduction in 2020, this one has been revised quite a few times. In the 2023 budget, it was rationalized into 5 slabs. The government also raised the tax rebate under this to 7 lakh rupees, meaning those earning up to 7 lakh rupees don't have to pay any taxes. This year, the government increased the standard deduction to 75,000 rupees, which means a person earning up to 7,75,000 rupees doesn't have to pay income tax, that is, if they opt for the new tax regime. In the latest budget, the government has also revised tax slabs under the new regime, widening the tax brackets. The tax rate starts at the 5% slab and goes up to 30% with higher income. Take a look at this chart. The government has proposed to push the 5% bracket from 3 to 6 lakh rupees to 3 to 7 lakh rupees. The 10% bracket has been changed from 6 to 9 lakh rupees to 7 to 10 lakh rupees. And the 15% bracket has been changed from 9 to 12 lakh rupees to 10 to 12 lakh rupees. Meanwhile, the old tax regime has remained unchanged, so those who choose to stick with the old regime follow the same structure, with tax rates starting from 5% and going up to 30%. However, the old tax regime offers several deductions. These can help reduce taxable income. There's a list of some commonly used deductions that encourage people to save more. This includes insurance, pension contributions, and housing mortgages, among others. However, these deductions are difficult for many people to understand, and to avail them, taxpayers have to submit proof of investment, which to many may just seem like a pile of paperwork that they have to wrap up. Experts claim these changes enhance the appeal of the new regime. However, higher income earners might still benefit from the old system. How? Let's compare both regimes with an example. For a person following the new tax regime and earning an income of 10 lakh rupees, they would now be entitled to a higher standard deduction of 75,000, which means their taxable income will be down to 9,25,000 rupees. So, while they fall in the 15% tax bracket before the 2024 budget, now they would be taxed at 10%, which essentially means now they fall under a lower tax slab. The calculation above shows that their tax liability would be 44,200 rupees. Let's try to do the same math, but this time under the old tax regime. Here the standard deduction is still 50,000 rupees. Now here we apply a few common deductions. Under the old tax regime, investing in a government pension scheme can reduce taxable income by up to 1,50,000 rupees. Paying a health insurance premium can reduce it by another 25,000 rupees. Similarly, by adding a few more deductions, let's assume the person is able to remove up to 4,75,000 rupees from their taxable income. Their taxable income then becomes just over 5,25,000 rupees. With this, their income tax for the year comes down to 15,600 rupees. Clearly, a person earning 10 lakhs can save more in taxes under the old tax regime. However, for that, they have to apply for all the available deductions, which can be a complex task for many. According to the experts, as the income goes above 15 lakh rupees, the difference between tax liabilities in the two regimes declines. They suggest that if a taxpayer is able to claim sufficient deductions on their taxable income, they can choose to stick with the old tax regime. However, if the deduction is less than 4.3 lakh, tax liabilities in both regimes become similar. This makes the choice between the two dependent on an individual's specific deductions and their income. While both tax regimes have their perks and flaws, opting for either depends on an individual's savings, investment habits, and understanding about the deductions they can avail. Meanwhile, the government, with its latest move, has made it clear that they are aiming for more and more taxpayers to move to the new tax regime. However, choosing the right tax regime is crucial. It could make a significant difference in your savings. So, weigh your options carefully to maximize your tax benefits.
Across continents, one powerful news source.
Bringing you diverse perspectives on the issues that matter.
We go beyond the boundaries to give you that little extra about every sporting moment. So thank you for making Firstpost 5 million strong. We're counting on your support, and you can trust us to bring you the news unfiltered and unvarnished.
Climate change is on our doorstep. It's time for a revolution to take root. And it starts with 1.4 billion Indians. It starts with one tree for humanity, one tree for Mother Earth, one tree for our future. Project One Tree, a News 18 network initiative.
On this today, the T20 World Cup bandwagon has moved across to the West
welcome to Firstpost America. I'm Aaron Ham, coming to you live from the nation's capital in Washington, D.C.